Okay, hi there, guys, and welcome. Sorry about being late, but I think the schedule would
Sorry,
probably
Kenny, we
fit
still
me a
can't
little
hear
bit
you.
better if it is 9:30 my time, which is Malaysian time, 2:30 Malaysian time or Asian time in certain places like Singapore, South African time. I think it's about 1 hour before, right? So it's 8:30 instead of 9 o'clock my time, your time. Testing 1, 2, 3. Oh, give me a second. Can you guys not no sound? All right, give me a second. Give me a second. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3. No sound. Oh. Right. Testing 1, 2, 3. 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 Testing. Okay. Hi there, guys. I think at my end it's all good. Alfred, you can hear as well. Give me a second.
But not the drop.
All right, thank you, Alfred. Okay, I think the guys in South Africa, they are not able to hear. I'm not sure, but I've checked as well. Everything is as per normal in terms of my sound at this end. Okay, but I think I better start because it's been long due and delayed as well, and I didn't manage to record a pre-recorded session yesterday as well. It's been very crazy this week. Oh, good now. Okay, Thiru. That's great. So you guys can hear me, right? So firstly, I would like to apologize for being late and a lot of jumbled up schedule this whole week because the cases in Cyprus as well has actually gone up. A lot of other countries, Australia, Cyprus has just got about 1,000 cases in a day. So we don't know, a couple of days ago or something, it just built up very crazily. So I was also caught up in transporting family members and all that, taking care of my son while they do the vaccination. So a lot of people scheduled for their vaccination all throughout this week. So I was very caught up with that, as well as some government officers meetings for setting up the companies and stuff like that. So hence the reason it's been a little bit hectic. But what I'm trying to do is to make it more consistent. So I think to have the schedule at 9:30 my time instead. So that's 2:30 Malaysian time, South African time. I think it's about 8:30 a.m., 1 hour before. So that would actually help me a little bit better. But of course, we have everything. All the webinars will actually be recorded. The other thing as well is that I'll be more consistent, try to be more consistent in terms of signals, daily signals, written daily signals with a chart and all that. And I've chosen the BKFX terminal to actually have all my analysis on a daily basis posted there, because I've got help there as well to help me organize all my daily analysis. And the IT team, as well as the team in BKFX, they are actually working on notification system as well for all my analysis. So that is very helpful. It's going to be very helpful for our Bretton members, as well as all the traders in our community. So that means you will get via email as well as via mobile all my daily signals that I have researched and written, and I'll put it all into the BKFX members area, also into the Bretton's members area. So I think in the BKFX members area would actually be better, so that all the notifications can actually be sent out. The moment I publish something, I've got a signal on a daily basis, you will get the notification by email and also via your mobile. Okay, so that's what they are working on. I would say within a couple of weeks or so, less than a month, we will get that sorted out. Okay. All right, guys. So what has actually been going on in the markets? Loads has been going on, but I just want to make it simple and short, since we are actually quite late already, to actually just go straight into a little bit of market analysis to know market sentiments, what has actually been going on outside of your chart. It's really important. So there is one that have struck me really very importantly, is the rise of iron ore. Iron ore has always got connections with Australia as well as China. And that is basically telling us that the iron ore has actually risen in price. It's very rare as well nowadays, iron ore. I will get even more rare. And it says here, as U.S. infrastructure deal aids recovery outlook. There's a little bit of a politic here. They put in as U.S. infrastructure, but it has a lot to do with more demand in iron ore by China. So then they're ridden along the bad news of US, bad news of Australia and all that, so that they can actually buy more iron ore, because when the Australian dollar goes down and everything goes down, they could actually buy it cheaper as well, the iron ore. So, but at least we know that the headline is talking about iron ore, which basically has got a lot of connection with commodities in a way. Also here it says dollar, or the US dollar have broke the range, and we can see that there's a lot of nice movements with GBP, JPY that I want to talk to you about as well. All the fall has actually happened. My TPs have actually hit, most of our traders' TPs have actually hit for GBP, JPY as well. So it was a good decision to actually keep the GBP, JPY. And I want to guide you guys in how to actually make the decisions correctly. And even though it has reversed, how do we actually stick to our guns, especially when prices have actually gone into the buy zone, high probability buy zone or sell zone. That's very important. So we've got a couple of things to talk about. Commodities, but this one here is really big. US dollar outlook. Has the trend finally reversed? So what that actually means is that, if you guys remember, about a week, 2 weeks ago, we've actually talked only about rising of US dollar and then falling of gold. And now it looks like there may be a time for it to consider reversing. That means bouncing down, sorry, not bouncing up, but then reversing to the downside for the US dollar. So what that actually means is that there may be a potential here to look into gold again. And then we want to know about fundamentally whether or not sentiments are going to change into risk risk off, not risk on, risk off, meaning that people would they actually be next week any fundamental sentiments that are going to make people fearful a little bit more? If yes, then we see that the potential of US dollar falling and gold going up would actually be quite nice starting from next week. But then, of course, this Sunday will be, I'll be doing more of my research starting today on commodities as a whole. and that does include, of course, crude oil and gold as well. So for you guys who wants to join in, please feel free. You can always go on to the Bretton.institute and register on our Sundays webinar that happens at 9 o'clock. I think I'll turn that into 9:30 as well. So 9:30 a.m. 9:30 a.m. would probably be better, but it depends. Maybe it's better at 10 a.m. or if it's better my time at 9:30 a.m. We'll discuss that a little bit later as well. So right now we've got to get going into various other things. For example, the top movers right here, heat maps first, maybe just to give us a little bit of an idea what's going on in the market. As you can see on a daily chart, this heat map on Action Forex right here is just a generic type indicator for me as a heat map or a tool. It's not something that I have mentioned this many times over, that it's not a holy grail type tool that you can use and rely on it a lot, but it's just a generic one that you need other tools to sort of polish it up and make it sharper. So here, for example, on the daily chart, but if you look into the daily chart itself, okay, you've got a little bit of a steady type increment of price or trend, bullishness of trend, especially for USD as well right here. But then they are all blue, light blue and light red, but we want dark blue and dark red. So if we go a little bit lower right here, you can see that USD is seen to be still on the bullish side of it, especially against euro. You can see there are more dark blues right here, against the GBP as well. But then the news is talking about a reversal. So we want to know which currency pair, because we cannot look at it generically. USD may be reversing, then it may be reversing with all other pairs at the same time. No, it doesn't happen like that. So sometimes it may not even reverse for certain pairs. It does actually depend on which currency it is actually combined with. It's really important. They all have their own personality type. So here, for example, we have got USD against euro, against GBP, seems to be the most steady one, meaning that we have got dark blues and we've got blues in general, but we've got more dark blues. The rest has got combination colors at the moment. Then if we go on a little bit lower, we can see that the rest as well is just trying to sort of find its way, finds its trend and trying to marinate more reasons into it. So it's not really that steady yet at this moment of time. Not at the moment. Let me just, but I want to keep my eye on to onto the euro, USD against the euro, USD against the GBP. Also because we need to check the economic calendar right here and give it a little bit of a run through of what is in store today. Now, today, as far as I know, it's quite a heavy docket of fundamental data or economic data, sorry. Today is Friday, July 9th, and we can see that we definitely have got Lagarde's speech right there. So it is actually matching a little bit as what you actually see in the heat map just now, where euro is beginning, euro USD, USD against the euro is beginning to have sort of dark blues and dark blues. But that does not mean that you can actually buy just now and things like that. But it does actually mean that the focus of traders could actually be the euro as well. They're expecting movement in the euro. With regards to trend, we, you and me and all the traders need our way or our style of analyzing the trend. So that we will do together in a bit. So euro, you've got ECB's President Lagarde's speech. So that's definitely going to move the euro a lot. And also we have got Canadian employment rate. That's also categorized as high volatility. And we've got two economic data from Canada that's actually categorized under high volatility or high impact because it's the red bar right there. Do I bother about all the numbers here? No, I've not actually looked at these numbers. I think more than 10 over years, I've not actually even look at the numbers and all that because it's quite irrelevant for me at this stage because we only see it as a fuel, the economic calendar, but the direction that it wants to go to has got other factors as well, and it's not only dependent on the results that we see. So we've got Canadian dollar, euro as the sort of catalyst moving the market for the euro and the Canadian dollar. So let's get back to here, and we want to look at the top movers before we we are at the stage of selecting sort of the right pair to do a further analysis on. And then once that is done, then we can go into the technical analysis much deeper, and then choose your basically decide on your entry exits and your stop losses levels. Okay, so here we have got the top movers right there, Action Forex. This is just, again, another tool, but a generic type tool. Now, if I go on to whether it's a daily chart, 4-hour chart, weekly, I always just start off just with the daily chart. But then what's most important is the 4 dots on all 4 time frames. So you've got your 4-hour, daily, weekly, and monthly. Now, as we can actually see, let's look at whether there is a uniformity, whether or not out of all these 10 pairs, which currency is mentioned the most in here, in this list of 10 currency pairs. So as you can see, you got USD JPY here, you got another JPY here, you got CHF, and then JPY again. So, okay, it looks like the winning currency that is contributing to the interest by traders and investors is the JPY. But I'm also quite interested to know why we have got, you see the top 4 right here, or top 6 involves all the safe havens, involves both safe havens, JPY and CHF. So there may actually be, it's telling me that the interest in getting into JPY and CHF, it's at the moment on the sell side of it, but then I presume it's going to pick up if we are expecting some risk in the market. That basically means that the sentiments will change into buying the either buying gold, JPY, CHF, and all that. Okay, so let's take a look at the VIX index. The VIX index is a fear index. So that basically means we want to just, give it a kind of view to know whether or not the VIX index is going up or going down. Now, the VIX index is a fear index. That basically, you can see it as giving you the idea whether the fear level is going up. If the fear level is going up, that means they are risk off. They are putting all their interest into gold and CHF, JPY buying and all that. Maybe not happen right now, but then it might actually happen quite soon. But it is our duty as traders to actually look at it on the chart, look at whether the reversal can happen, look at whether the trend is really clear, and various other things on the checklist. So here, this gives us an idea that it has actually been up by certain percentage points as well. And this basically means that there may be fear going up. There may be a reversal in gold as well. Gold might go up, CHF might go up, JPY might go up. So we just want to be careful with that idea at this stage. Okay, so also top 3, we've got USD JPY, CAD JPY, USD CHF. At this moment of time, the interest of traders and investors has been on the buy side against all these safe havens. So that means USD is still on the upside. It looks like it is on an upside. It is still an interest by traders and investors to buy the USD. It's 2 different things. It's not about the trend, because we've not checked the trend yet. We've not gone on to the charts, look into different time frames. Only then we have checked the trend, but now we've not checked the trend. This is the trend that has been lagging as well. So what I would look at in a table like this, especially this top 10 movers table, is especially the dots. The dots needs to be, all 4 dots would actually be the currency pairs that I want to pay a lot more attention to, because the trend seems to be a little bit clearer for these pairs. Whether it is an uptrend, downtrend, we don't know that yet. We make that decision when we go into the chart. So I would list it down with the pairs that has got 4 dots. Now, the other thing I want to sort of warn or alert you guys is that when you look at this table right here and then look at all these dots can actually change at any moment of time as well. Okay, so as of now, we're seeing this, and we can always double confirm, double check, and things like that on the trend. So it's not really sort of a holy grail system or tool that we can rely on 100% and is high probability. No, it's just a generic thing to guide us on our process in picking the pair. So as of now, I just want to pay attention to the CAD because it's got 4 dots right there. When I say pay attention, I basically mean to analyze it further to make sure whether or not I can see clarity of trend in the charts. Okay, just to cut us a little bit of time. CAD, CHF as well, because you want to always cut off your time in analyzing too many pairs too long, and that would actually miss out a lot of opportunities as well. So we've got the next one, NZDJPY as well. Okay, and we've also got AUDJPY. All right. Also, I would prefer to look at both euro crosses as well as CAD crosses, mainly due to its expected volatility today from the economic data that will be released. So we've got something to play with in terms of analyzing further, not to trade at this stage. We are not thinking of trading at all. There's no decisions to be made, entry, exit, trend, nothing. It is just picking some pairs to warm up our trend analysis, and then we will decide later on. Okay, so nothing happens at this stage. There is no trend talk, entry talk, exit talk, not yet. It has not arrived yet at that for that moment. Okay, so we've got this, and then we go on to markets again, and you go on to the one more tool right here, action bias. The action bias tool is also quite interesting sometimes to look at whether or not we have got a straight row of arrow ups or straight row of arrow down, but it should be nice if we've got more straight rows right here. Like for example, AUDJPY is also one of the pair that I've listed down from the top 10 movers, and it's looking like it's fairly bearish against JPY. So that does actually give me a little bit of an idea that there may be a pickup of interest in buying JPY, mainly because of the safe haven. Because of it being a safe haven. CAD, CHF as well, it's on the downside. So we've got both CHF and JPY sort of giving me hints that it might actually be on the upside. So all other pairs, most other currencies may be on a bearish side against both JPY and also, yeah, we can see it's all red right here as well against JPY. Against the CHF is the same thing. So in my rough guess, it looks like the sentiments of the market may actually be winding down for the risk on side of it. All the buying and all that, all the confidence may actually start to wear down a little bit, and I think they might be picking up into wanting to put it onto safe haven. So I think starting from next week onwards, we might see a change in terms of the whole sentiments, giving us opportunities for buying safe havens, including oil, including gold as well. And we want to look at oil and other commodities in relation to that. So let me just check on Monday right here. Now, Monday, as usual, it's as usual, a Monday could be very, very low in volatility. I think there's no high impact news. But then Tuesday onwards, things start to pick up on the euro side with Germany's what do you call that, data on harmonized index on consumer prices. So, okay, not too drastic at the moment, because I was just wondering whether or not we can see that. The other thing is that I want to keep you guys aware of Sunday, July 11. There is the ECB's President Lagarde speech again. So that might actually move market on Monday. So maybe, traders might get a little bit surprised to look at Monday. There's no economic data on euro, but suddenly euro moves so much, things like that. So, that is on Sunday, not Monday. So that is a little bit weird. Give me a second. Yeah. Okay. Let me just take a look at next week. We just want to look at next week. Of course, Monday we will get into it much deeper. Okay. Check. Let's look at, so this is Sunday. You want to be very careful with this one. Sunday, 11 July is a speech on a weekend on Sunday. And then Monday, 12, oh, we have got the Eurogroup meeting. So this is more accurate at this moment of time. So what I am expecting to happen, Sunday, July 11, we've got the, is it on Sunday? Yes, it looks like it. And then on Monday, we've got the whole Eurogroup meeting right here, where you've got all the finance ministers, member states, and all that. They'll gather, and I think they will communicate everything that has got to do with the Eurozone, countries within the Eurozone, the COVID situation as well, will impact the business economic situation. So I think we may actually experience a lot of volatility for Euro pairs as well. So I want to look at Euro pairs, but that would actually be best on Monday itself to give you all the trade ideas and trade signals as well on what could actually move. But it looks like not a bad week at all to actually look at quite a number of pairs that would actually be moving quite well. Wednesday itself, very, very busy docket on July 14th, and we can see quite good movements. I would also expect there, but we'll talk a lot more about the week ahead on Monday itself, but we'll touch on that on Sunday as well, day after tomorrow. But we've got very nice data coming up next week and very heavy from Wednesday onwards. So Wednesday, Thursday, and also Friday will be very, very high with loads of volatility and liquidity as well, because we've got very, very big news, high impact, and very crucial news that will be released from Wednesday onwards. Okay, so that's good. So let's talk about that on Monday. But right now, we want to get into the chart. Okay, so before we get into the chart, I just want to remind you guys as well that we have the GBP JPY has hit my TP very nicely right here, and the TPs of you guys, congratulations as well. You got pending order at the sell that we were looking at because it went into the zone as well, and I was floating as well, a couple of thousand, maybe 2,000 plus real money. It went up to about 3,000, went down systematically, really nicely as well. And I had a lot of checklists, and we were discussing this checklist in our webinars as well, and that proven to be quite good in terms of price action as well, and then the power of the mother candles, the shape of the mother candles, and your evaluation onto the trend based on high time frame. So don't be afraid in looking at high time frame. Even though you are a scalper, it doesn't mean that you look into the high time frame, you will be trading based on the time frame. No, you are getting data based on a high time frame to benefit you in whatever time frame that you are going to be trading. So don't be afraid in looking at high time frame for data, because they've got the best, most accurate data as well. And hence the reason we managed to hit our TP at 15230 as well. And did I actually re-enter and all that? No, I was not paying that much attention to re-entering and all that, but I just had that pending sell. I waited a little bit. It cost some damage in terms of the floating at that time. It went up to about 3,000 or so at some point, but then I think it was almost a 2 weeks wait, a week and a half maybe, and then finally it just hit the TP. But you know, that's the outcome that we want, especially if we are convinced, not convinced, we've got good enough data, clear enough data to give us the idea of the trend and the trend marathon, how long would it actually last, how solid would it actually be, and various other things. So we're going to discuss that today as well, as usual, going through the steps. Okay, so let's take a look at Euro and Canadian pairs, but because we're talking about Euro, I think it's always good for us to also start off with the Euro USD, the most traded pair as well. So I want to go through with you, and let's do a little bit of a trend analysis first. Okay, so now here, as you guys can see, let me just put that somewhere. I'm looking at the daily chart. Now, the three lines or the four lines right here, we've got a 50, 100, 200 EMAs as well as the 8 EMAs. So I've got four lines, let's say, but the three lines is the most common one that I use. It's exponential moving average 50, 100, and 200. I've been using the same way for over 15 years, the same style of analyzing the market. Most of the time, price action and patterns. But we are using the fundamentals as a fuel for us to ride along the market with a solid trend. So it's only a fuel or a catalyst to move the market. Now, here we've got all this downward type movement. Okay, and here as well, let's just put this one in. We've got a sort of a slight sharp type pattern here. If we look at it as a whole on the daily chart, we have got this shark-like pattern. Whether or not it's a high probability pattern or not, we're not really that concerned at this moment of time, but it is giving us a sort of idea that the euro has got more room to go down. But will it actually go down in a straight line? No, of course it was zigzag down, but you need to understand that if you are in the buy of the euro, then you need to be a little bit careful as well. But then if you are riding along, whether it's uptrend, downtrend, you need to understand the big picture. The big picture right here gives me a hint that the euro have got a little bit more room to the downside. Why? Because this is the type of a sharp pattern that signals more room to the downside, and usually the fall of price would actually go beyond this area, and that would then complete the pattern, you see. So here that means that it needs to actually go, it would most probably go under the 1700 area, if at all this is a high probability type pattern. Sometimes at the beginning of a pattern, it may not actually be high probability, but as it moves and as the trend actually clarifies further, solidify further, that pattern that is from low to medium probability can actually turn as the trend solidifies into a high probability pattern. So it can actually transit. It can transit from low probability to high probability, but in stages as well. Okay, so that is for most of the instruments and the way I actually look at it. So now if I go into the daily chart, I just want to look at what can I see? What can I notice as well when I look at it from a big picture perspective? So it's quite simple. When we look at it, we look to the left a little bit, closest to the price. We've got prices going under the support zone right there. So that means, okay, it is actually heading lower in price, maybe heading towards more bearishness for Euro USD. So still, it's telling us that the USD is stronger than the Euro. But now let's look at price action as well. To the right first, we look at 1832. Now 1832, as it goes lower, it would be, perhaps it would bounce. If it decides to reverse and bounce off, it could potentially bump into the 1820 area and start to bounce back up with the fall at the moment and bounce back at 1820. Okay, so this is a price guidance right here, very important, a potential support area at 1.1820. Now, if we look a little bit to the left as well, we have got that 1820 area mark there. There's a support right there as well. So yes, that is a very crucial area. But let's say prices at the moment goes up and up and up and up, and it's at 1832 at the moment, 1832, and then as it goes up and up, it will bump into the other psychological number of 1850, right? So I will mark the two horizontal lines based on psychological numbers first, okay, which basically means as it goes up, it might find resistance at these psychological levels. Okay, so you've got 1850 right there. Now I've got 1850 and 1820 as my psychological levels. So that basically means that if I am seeing the potential of price for Euro USD to fall much more, then it needs to go and pierce the 1820 area and go much lower, which basically means if you are thinking of selling, your ideal selling price should actually be at 1.1810 10. Your ideal buying price, if at all you're looking at reasons to buy and then the price has gone up, it needs to pierce this 1.1850 area, and then your ideal buy price will only be at 1.1860. This can actually be pending orders as well, right? But right now we want to look at ascertaining what is going on with the Euro USD. So as it comes down, let's say we are more biased to the downside because of majority of candles under all the three lines, but the three lines or four lines are not very clear. They're not breaking apart from each other and pointing down. If it does, if these lines do that, then it is clearer on the trend. But as I go on to the weekly chart and look at it from a bird's eye perspective, I can see that things are clear and not so clear with certain things. As far as I can see, it has pierced through on the Euro USD weekly chart. It's pierced through with a wick down here, and that candle signifies uncertainty to move lower because the wick is longer to the downside. So that actually means that sellers may be a little bit exhausted as well. So anything can actually happen, whether there is a catalyst, something happens fundamentally in the euro with the euro news, or anything that happens today would actually bring it down or bring it up. So that we want to use the catalyst. But as far as I can actually see, it looks to me like there may be a potential of a reversal as well because of the exhaustion of sellers at this moment of time. If it does actually pierce through the 1850 and go up, I see a little bit of a limit as well for the buy side, because I see the mother candle right here of the bullish mother candle, but it ended at the closing price at 1897. So yes, 1890 or so could actually be your take profit for a very small 30 pips potential on the buy side. So let's say you want to take the risk and you want to do a pending order buy at 1.1860, you can take profit at 1.1890. But you see, I am not talking about convincing type market at this moment of time. So I have not drawn a blue buy zone or a sell buy zone. This is just taking it as it is. If traders want to just participate in the market and do a little bit of buy, a little bit of sell, that kind of thing, then you can actually do that. But there is no solid sort of trade plan in stages to take profit and all that, because there's just no blue zone and no red zone at this moment of time for Euro USD. But things are moving, but we need to look at how much it would actually move. But I can tell you this, with Euro USD, as far as the pattern is concerned, as far as the price action is concerned, I can see that it's leaning towards the downside more than the upside, mainly because if you look at it from a bird's eye perspective, the power of selling is much higher than the power of buying. The reason I say that is because beyond this area of 1.1850, if you look to the left, and this is your weekly chart, we don't see powerful bullish candle piercing through this area and giving us a lot of excitement to actually buy. But we see that the selling is much more powerful. We can see the selling right here. We've got a buy right here, but it stopped here with this bullish candle. But we've got a selling that starts off from there, another selling that starts off from there, another selling that starts off from there. So we've got three major bearish mother candles. So that is giving me the hint that the market may prefer a downside move. So if, for example, in the next 1 hour or anytime soon, we hear that the news or economic data is more negative for the euro, then we see that it comes down, then your probability of entering a sell is much higher, and your take profit for the sell would actually be much better. So we've got close to 100 pips opportunity right there. So I'm leaning towards more sell, but then I need confirmation of price to go under 1.1820 first. Okay, so you guys understand a little bit on the big data type, big time frame analysis. So now you know you've got an area right there for your sell, right? Buy not very strong. So as we go on to shorter time frame and you are a shorter term traders, for example, then you can actually take a look at what's going on right now as well. So here on the 1 hour chart, for example, you can see that price is a little bit uncertain because trend is uncertain as well, with the three lines moving like this sideways, not moving down. It needs to tilt to the downside and all the candles under it. Then we've got a stronger downtrend to expect. But at this moment of time, it just found a little bit of support right there. Is battling as well. The price is in between all the three lines. We need price to go up much more. So at this moment of time, we've already laid out a very nice 1.1850 to 1.1820 no trading zone. Okay, so for me personally, I wouldn't be trading at all right here, but for scalpers who are more skillful in scalping the market, they know how to actually handle this kind of situation and still make money here on the short term, taking a couple of pips kind of style of trading, which is scalping. And that is something that I'm not specialized in, and I'm a trend trader. So I would probably be looking at price only to buy if it pierces through 1850 or 1860. And for me, better still, if it pierces through this area of resistance and above the 200 EMA, then I will look at buying opportunity. But right now, the bias is to the downside. As we go to the medium term 4 hour chart, you can see that it gets clearer in terms of the trend, because you've got three lines moving very nice like a river flow, and they're not touching each other. And then you have got touch point of resistance coming down, using the 50 EMA as well as a resistance level. And then most of the prices in terms of candlesticks are under all the three lines. So there you go. This is basically the analysis for Euro USD. I hope it's clear for you guys who are trading or thinking of trading Euro USD today. I'm not thinking of where it might go and how far at this moment of time. I'm going to take it stage by stage. So I firstly would love to see that the price manages to pierce through, and then have some fundamental factor to fuel the euro to go down. Then I think I would actually ride along the sell of the euro against the USD. Everything clear, guys? Any questions at all? No questions? You guys okay? Any questions on Euro USD at this moment of time before we move on? I would like to take a look at gold as well as other currencies, but especially the Euro crosses and CAD crosses. All good, brilliant. Okay, so let's take a look at GBP JPY since we have it here. But before that, yes, GBP JPY, we've already gone there. I would like to leave it for now at this moment of time, mainly to pay more attention on Euro pairs as well as Canadian pairs. But let's very quickly take a look at gold. Now, gold is in within, again, right now, which is great, the buy zone. So it is a buy zone. Would you buy now at this moment of time? Yes and no. For those who want to buy and take the risk, yes, you can actually buy, but make sure you exit at the 1809 area, because it's already been marked as a resistance zone, 1809 or 1813. Okay, so be careful with that. 1810 may be better to actually exit on that. But anywhere between 1809 or 1813, you can plan for your exit, because remember, the exit is more important than anything else at this moment of time. So then the new buying would then take place. And I would then look at this area right here as exit. Okay, I'm going to change this line red, your resistance and exit area. Okay. Okay. There you go. So we've got exit areas right there, 1809 or 1813. Then you buy again, let's say at 1815, but make sure you exit at 1826. Then you buy again, let's say above 1826, you exit again. All these red lines I'm drawing are potential exit areas. And then you exit at 1835 or 1834, let's say. And then you re-enter again, and then you buy again. And then you buy again and exit at 1842. And then we have got a little bit better, bigger gap after 1842, maybe about 1845 or so, you buy again, and then you exit. It's probably best to exit here at 1858, or maybe it's entirely up to you, 1855 perhaps, and things like that. So I'm not paying a lot of attention to doing other things like selling or anything like that for gold, mainly because it is in the buy zone. So in the buy zone for me, I don't pay attention to the correction and everything else. My eyes are only onto the buy and onto where should I exit. So that is basically it. Now, at this moment of time, if you ask me, am I going to buy right now? Should I actually buy right now? It does depend on what's going on as well. Now, in a buy zone, it's probably best for you to see that the candles are also on a buy, and then it's a healthy lead to the upside, then you buy, even though you are in the buy zone. Okay, just so that you avoid waiting time and things like that. The reason for that as well is that this is the daily chart for gold, and we have got resistance building up already right there. So the question is whether or not this will remain a resistant area to pull down price, or will it actually start to pull down the gold's prices a lot more until it pierces through and go under the blue buying zone. If it does go through and go under the buying zone, then it may actually be a little bit of a spike, not really a confirmation of a trend change yet, but I'm not sure whether that would actually happen or not, because we just don't know the brains of the market itself. It has its own mind. So it needs to pierce through 1791.73 first, and then we will strategize further. Now it's too soon to tell. Now, because it is in a buy zone, my eyes as a trader would actually be whether or not price will actually go up with a powerful bullish candle, whether or not the US dollar and all its other factors in the US would actually bring the dollar down. If that does actually happen, then I am waiting and waiting until I see the price go above 1813. So for me, I think personally, I will only start buying at 1815. So what I would do is do a pending order at 1815, and then I want to exit at 1825. So 1815, 1825 would actually be my pending order buying price. Okay, nothing at this moment of time, because it's not convincing enough for me what is actually going on right here. Okay, so that is based on the daily chart. On a shorter time frame for gold, we can see that yes, it's got all this power at the moment to go up on the 1 hour chart. As we look to the left a little bit, we have got resistance at this area. Okay, so if you are buying right now the gold, make sure you exit at 1805, let's say, or 1806, entirely up to you, right? If it goes a little bit further, you want to take the risk a little bit further and not exit at 1805, you can also exit at 1807. But right here, I think this is where you would need to exit, is 1805. Will probably be much safer. If you look to the left, you have got all this thinking area right here that is very, very powerful resistant zone. So I don't want to mess with that, with this area, especially closing opening price of this mother candle, this body of this mother candle right here. So you can see that this is where I would start to exit as well. But then if we go on here a little bit, okay, I would prefer 1805. Yes, that confirms to me as well, all this area right here, that whatever you do, if you're excited with the buying of gold because you would think, okay, it's an uptrend right here. No, it's not an uptrend, it's not a downtrend just yet, but it's biased to the upside, maybe as a reversal, but the timing is very important. It's just marinating, just getting into the mood of risk, of environment, risk on of sentiment. So you need time for that. And I think from next week onwards would actually be much better, much clearer, and much solid a decision to buy gold. But as you decide on where to buy, the most important is your exit price. So now at this moment of time, it's moving. If you are buying, getting excited with the buying of gold, make sure you get out and exit at 1805. Maybe put your what do you call that, your take profit at 1805. Okay, so this is a little bit And also you can shift your stop loss a little bit, not too far down, for example, a little bit closer to this area of support, perhaps. Okay, so there you go. Maybe right a little bit under than the support. So around here would probably be good under, let's say 1790 as your stop loss. If your stop loss was actually much lower, then you can shift it back up to 1795 or so. Okay, so that's for gold, guys. Now, I will talk a lot more about oil tomorrow, a day after tomorrow, on Sunday session. This is for silver. We had some interest with platinum as well, right here, and it's doing quite well in terms of expected price movement within a range. It hasn't broken out anything yet. Let's take a look at GBP USD as well. Now, GBP USD is trading at 1.3777. It's really close to 1.38. 1.3780 psychological level. As it moves right now, the way I look at it is, this is on the daily chart. Let me just get rid of all this as well. Give me a second. Hang on to your question right there. I'll come back. Give me a second. Okay, let's take a look. Okay, for GBP JPY, the question is whether there are any other potential GBP JPY to go down more. Okay, that's a very good question. We can take a look at that. Give me a second. We'll just analyze GBP, not analyze a lot, but just look at it from a bird's eye perspective. As far as I can see, it might actually find a little bit of support. This is GBP versus the USD. But then let's look at GBP JPY as well. It's very crucial, mainly because if there is an expectation of JPY going up, meaning that expectation of people putting their money into safe havens, that means JPY will become stronger. So if there are more and more movement to the upside for JPY, there is a high potential of GBP dropping. But we need to also evaluate the news factor, economic factor of the UK, right? So here, for example, let's look at whether or not we can find something that has to do with the GBP. If not, very easy, we'll go on to here. You can always put UK, Britain, economy, okay? And then go into the news section right here and look at 22 minutes ago, an hour ago, 22 minutes ago, the headline for the UK is UK's economic rebound slowed in May. Car makers hit by chip. So, it's not very positive. It's not too bad, but then it's leaning towards a little bit of downness. Okay, so I will change this one now to Japan. Okay. 2 days ago, 4 hours ago, Japan's fresh virus emergency to cost economy 1 trillion. They're talking about the cost, the damage, but they're not talking about continuous problems at the moment. They are sorting things out. 2 days ago, 22 hours ago, Japan to reimpose COVID-19 state of emergency in Tokyo. Now, that's big news, right? So this one here, it is giving us the emergence of COVID-19 Tokyo shutdown, basically. So it says here it is set to reimpose, but the thing is that that could also mean that a lot more capital will actually come into Japan, because that's how Japanese work, is they sell their shares and all that outside of Japan, and they basically still have the Japanese yen as a safe haven. So there is a potential of yen to the upside, not downside. So be careful with this. It also says this will keep Tokyo under emergency measures throughout the Olympic Games schedule from 23rd of July to 8th of August. So we've got still about 2 weeks or so before the Olympic Games starts in Tokyo. Okay, so it's not very clear news, but it's giving us a little bit of hint at the moment. For me, it is, yes, negative news, but because of how Japan works as a country, the more crises happen, and then it replicates all throughout Asia, the more the Japanese yen will actually become a safe haven, the most preferred safe haven. So that means Japanese yen would actually be stronger. So if that does actually happen, very likely, then we are seeing the potential of GBP, JPY falling even more. So right now, what we can do is to clear out all the noise that we have, because it hit TP already on this one. So it's a good one on GBP, JPY. So it's time for us to have a fresh start into knowing price action, draw fresh lines and everything else. Let's look at what's going on. Okay, so we're looking at GBP JPY on a daily chart. We're looking at prices at the moment very, very close to the 151.50 psychological number. Okay, so that means, okay, it's on the way down at the moment right here, but it's given you that hint that it might be exhausted to go down. Why? Because of the wick right there. And right now, as well, as you can visually see, the candles are reversing to the upside. Now, from the daily chart, if I were to consider the location of buyers, when is a good time to buy, when would actually big traders would want to buy, is actually quite far up here. Okay, because you got support right here. But when we look to the left, we've got another very powerful support right here with a bullish candle that doesn't have very close to not having a wick to the downside. And then as I look left again, oh, it's a resistance right here. And as I look left again, it's the same level right here as well, as a very powerful resistance. So that resistance could become support, and this support is giving me hints that we have got powerful support above. Okay, this is a daily chart as well, not just yet, but these are resistance layers and these are areas. So I think the support would only start at 15200 onwards would actually be a better place to buy. So that also means that it's very far away at the moment from the current price. So the current price looks like it's favoring the downside much more. Now, the thing about it as well is that we have got a gap between the 100 EMA and the 200 EMA as a possible area where the fall can take place, because it would actually find support at close to the 200 EMA right here. Now, as it comes down, let's go on to the weekly chart. Now, if you look at the weekly chart, just to the left itself, we talked about this as well a couple of times throughout the week, because we were monitoring GBP JPY, is that we have got that bearish sentiment right here, okay, and that bearish candle and that bearish sort of sell zone. So what I'm going to do is I'm going to mark that sell zone with a rectangular shaded area, red in color, to mark that the current price right now is already within a selling zone, okay, based on that mother candle right there. So then I go like this. Okay, so yes, it is within the selling zone at this moment of time, with potential support area, let's say around here, which is end of the area at 150 point, it's close to 150.20 area. So whatever you do, if you are selling at this moment of time, it's probably best to exit and not get overly excited and not have your stop loss and not have your TP. So your TP should actually be at 150.30 area. Okay, so that is the zone right there. Now, this is based on the weekly chart. So what we need to do is now it's the time for us to, when we get that zone, that big perspective, and then we get a summary of the whole market, meaning that yes, there is a potential of GBP JPY going down. The probability is quite high, mainly because of the mother candle right there that gives us that selling zone. So the current price right now is in the selling zone, but do you actually buy right now or sell right now? It's not probably the best of price to sell, because it is too close to 151.50. So the best selling price at the moment, if you are thinking of selling, you have to wait until it goes 10 pips under 151.50, which basically means at 151.40. So once you go at 151.40, then you can look at your take profit at 150.30. So you do have some room right there. Let me just mark it as red in color right here. Okay, so for red and price wise 151.40. Okay, this is a better price to sell. Okay, and your take profit 150.25 or 150.30, entirely up to yourself. So that itself gives room to the downside of about 100 plus pips. But you don't need all that 100 plus pips. You need to take it in stages, 30 pips maybe. And how do we take it in stages? We go down to the time frame and then we plan. Okay, so now we go here. As prices come down, maybe following this mother candle right here, we've got expected support right there. So basically, your short-term type profit, take profit, should be based on this line right here. Oh, give me a second. Just change the color so it's more visible. Okay, so now we have got this area right here. So 151, 150, 151.10 would probably be good. So I'm adjusting this one here to 151.10, which basically means is your take profit as well as a support area. Okay, so that means if you are selling at 151.40, then you can actually take profit at 151.10. Okay, so if you want to wait and then you want to spot order it, or you want to do a pending order right now, you can do a sell pending order at 151.40, and then your take profit is 151.10. Okay, so that's 30 pips potential right there. So this is how you break it into stages. You look at the whole big picture in a very big time frame, then you break it in stages, meaning that you need to go down to different time frame that fits you, and then you find that 30, 40 pips, 20, 30 pips, and then you trade it that way. That would actually be the safest and best way to actually scout the market while you are not really sure of the trend, but you've got something that you can actually make with regards to the bias of the price coming downwards. Now here I have got a potential A right here, potential B, C, and then D to go down lower, right? So what I can do is draw my A to B line right here and use my Fibonacci to look at where the C point has potentially landed, which is a very good high probability Fibonacci retracement area of 78.6. So then we also just aim at the D point by using AB equals CD right here, the pattern, and it is giving me the exact same hint that you can exit at that area right there. Okay, so then we complete the drawing of the bearish AB geometric ABCD pattern right here. We take this one here and we go down over here. Now, using this pattern itself, it has given us an entry point based on the centroid much earlier right here. Didn't actually wait until we get into the sell zone, but me, I'm a conservative trader, so I only traded a sell once it pierces through this area here, and I think I traded at 152.70. So 152.70, let's say, this was my selling price as well, and all the way to the current price I've already sort of up and positive by 115 pips. So I usually trade at $2 or $3 per pip in terms of the lot sizing, and that's basically it. So here we have got all that appreciation of price going on, but this is what goes on at this moment of time. Your planning, your sell planning should actually start at 151.40, take profit 151.10. As it goes 151.00 and under, then you plan 150 0.90 to be your sell again, and then you look at reference point based on bearish candle, and then you take it from there. But at this moment of time, that's where the concentration is for that 30 pips fall and the potential of making the 30 pips as well, selling at 151.40, take profit 151.10. Okay, but overall, yes, it may have the potential to drop even more until the lower of this area for GBP JPY. Okay, I hope that is clear. Any other questions, guys? I just want to look at another euro as well, mainly euro JPY. Okay, we've got questions. I was just talking about euro JPY now. Brilliant. So good timing. Let's take a look at euro JPY. All right, so let's take a look. Okay, euro JPY. Let's look at it from a bird's eye perspective. At this moment of time, price-wise, looking to the right, is very close, 1 pip away from the 130.20 psychological level. So it's not good to buy, to sell. But what I can see on the daily chart, you need to start to notice things on the left and the right. I can see that you've got support right here. Okay, starts with a bullish candle there. So that support would start at the opening price of the bullish candle right there at 130.50 exactly. Very close to 130.50. It's actually not exactly, but 130.48 at the very close to 130.50 psychological level. Now, it's a good sign when it actually coincides or create convergence with all this area right here. And this whole area is resistance, very powerful resistance. So I would like to also mark it here with all the wicks to touch all the wicks as well. Okay, right there. That gives me a price of 130.67. So 130.60 onwards, you can actually then buy. But I want to look at this area right here. So it looks like it may actually be favoring the downside. Favoring the upside, because it is actually just going above at the moment on certain levels. But the way I look at it is to look at how Euro JPY's price reacts to this area. Very, very important. When you have all these candles going sideways like this, it is very, very important area of meeting, area of thinking. So it needs to go past that area. If it goes past that area, pierces through, basically at 130.60 onwards, you can start to buy. Okay, so then when you start to buy, you need to think of your exit price. Exit price also, you look to the left. I want to just change the color here to your exit price or your resistance area. So here, if I put it right here, why here is because we've got quite a powerful support right here, and that's at 131 area, right? So if at all you're buying at 130.60, make sure you exit at 130.90. So that's another 30 pips right there. So if you want to plan for further buying, I would advise you plan your further buying only above 131.30 and above. Okay, just so that you get a better pricing and also a better conviction of the current trend. So here 131.30, I'll give the price of your next buy later on when prices start moving up a lot and giving you more hints to the upside. Okay, so there you go. That is where you can actually buy, and then your exit price as this goes upwards, I think this area roughly could be yours. So 131.30 and then 131.70 area. That's about 40 pips. Okay, below the 80 psychological number. There you go. These are all pending orders potential as well. Also, location is really important. The location of your buy is only later on at 130.60, not right now. At this moment of time, it is just too close. It is close to the 20 psychological number, but as it goes up, it might meet the 130 0.50 psychological level as well. But at this moment of time, I'm more biased to the upside for Euro JPY, not downside. So I think this area right here or this area right here, okay, that should be ideal for the buy. I think this is better. So this is close to exactly at 129.80. So that is a very powerful area as well for your support. Okay, so it is going up now, but not the right sort of timing to enter right now. Of course, it is at a reversal area of 129.80 psychological level. Okay, there you go. Done. So this is your Euro JPY. Is that clear? Euro is okay for you? Right? So your buy price 130.60, exit 130.90. Once you've hit that, then we plan further, but all the lines have already been drawn for you on when you can buy next and exit next. Okay, all good, guys. All right, guys, I think I may have to end the session just to catch with another webinar as well. Any other questions before we end the session for today? I will actually definitely have more coverage on consistent webinars. I try my very best next week onwards, and also the signals. But I'm thinking that if I am in time later on today, I would do another video, pre-recorded session if I notice any movements, especially after the economic data releases. Then I think we're seeing more movements to be confirmed as well. Okay. All right, guys. So if no questions, I would like to say thank you for spending your time with me today. And thank you for your patience as well. I've been canceling some, sessions and all that. All good. Yeah. Thank you for that, Thiru. Good. Thank you. You too, Alfred. Take care, guys. Have a great one. Have a great weekend as well. But meantime, any questions, just direct message me. Okay, guys. Take care. Thank you. Have a good one. Bye-bye.